Hello, this is Datatraderpro with a nightly market wrap for, I guess it's Monday, August the 1st. So happy August, happy midsummer, and yeah, let's get right to it. The market has been frustrating, I think, for everybody. Let's have a look at the Dow. Dow made its high recently. This is a weekly chart, actually. Let's go to the daily. But it has been trending down for, I guess, about 7 sessions, something like that. Unlike the S&P, which is floating around its high, made a new, I believe, very slight new all-time high. Russell is floating around highs. The real powerhouse has been the NASDAQ 100, which is, basically gone, well, I won't say parabolic, but virtually parabolic. I think it's had either these little consolidations are still, there haven't been any drops. They've just been really narrow range consolidations. And then, basically we pop up. So we've had something like 13 sessions higher out of 17. And the other ones haven't been pullbacks either. So it's something like 17 sessions up. Unbelievable run, but it looks like it's getting tired. We've got embedded technicals, the stochastics are embedded to the upside, which means that they just stay in the upper range above their sort of overbought condition, and they just remain there. So you can't really use this to time something like the NASDAQ 100, which has just been a beast. But again, daily upper Bollinger Bands, it's come quite far away above its, even the 20 or the 50, certainly the 50, but even the 20, I expect a pullback fairly soon, but timing this market has been a chore, I think, for everybody. Weekly, NASDAQ above its Bollinger Bands as well. And stochastics well overbought and maybe starting to curl. You look at the weekly on the SP 500, it's starting to show a bit of technical weakness here, right up at the upper weekly Bollinger Band as well. Really, one of the big stories is the VIX, and the whole volatility, implied volatility space has been crushed. It keeps staying down. We did have a pop not too many sessions ago, but this was Brexit time. Obviously, this is weekly, but we're down into the range where look, VIX can get down to the 9s or 10s, and it has in the past, but it doesn't stay down there. Except for one period in the 90s, it hasn't stayed down there for long. So. Just going on past performance, which doesn't always predict future performance, but going on past performance, we're getting down to about as low as we generally get on the VIX. And volatility is strongly mean reverting. I've said this in many other updates, and when we get into the 12s and certainly the 11s. I look for a move back, mean reversion. We got to remember the long-term mean of the VIX is. It's a little under 20. It's about 1970, something like that now. So it's come down over time. It used to be over 20. So VIVIX, which is the volatility, the VIX of the VIX, basically, is making some higher lows. Came down off Brexit and is making higher lows. So it's. There is a little bit of volatility within volatility space. VXST, the short term, also bashed up, beaten down and bloodied, just like the VIX. But this is only a 9-day implied volatility index. When it moves, it really moves because it represents the shortest term implied volatility index. VXV is basically the 3-month version of the VIX. So that is also beaten down. That was up slightly today. That was up about 4% today, but didn't finish on its high. So a little bit of life and volatility. This is a trend line. I think if we go back, a trend line that's held for quite a while actually has broken. So we're below the long-term trend line, but that trend line is an upsloping trend line on 3-month implied volatility. So it's really going to take a close above this level, probably above low 16s, where was it, 1612, something like that, 1610. that area to get probably a decent move started up in volatility. Remember that this being the 3-month implied volatility index, it does not move right away when the market experiences some volatility. Generally, that volatility is short term. It'll transfer over from VXST to the VIX, and if it has enough magnitude and implied duration to the volatility move, it will move the 3-month volatility index. So it's going to take a little bit of a change in direction here and some real selling and a little bit of, well, I won't say fear, but a lowered level of complacency. And really, we've had summer trade, we've had a big rally. We've been sitting up at highs, and the market is complacent. The market is acting like it can never go down. That's usually when it does go down, by the way. But when no one believes it can go down, and it shouldn't, quote unquote, shouldn't go down. I'll show you some other things. OEX, this is the S&P 100, the top 100 of the S&P 500. On a daily is made a doji. Technicals are coming down and making a lower high, so we'll see. But may not be ready to roll over yet. We'll have a look at that down the road. Anyway, what else do I want to have a look at? I want to look at the site. Actually, maybe I will show you. Sorry for the dead space for a moment. Okay, let's go to that. Let's I don't know if you can see all of that. Okay. All right. So this is a range chart, a 20-tick range chart. So basically 5 points on ES. These are the E-mini S&P 500 futures. You can see how long we've been in a range. But basically since July 14th, we popped up into this range. And for the most part, we've made a couple of little pops above it. For the most part, we've been sticking it sort of, under 2170 and over 2153, 54 area. We spent the majority of the past 2.5 weeks, 3 weeks going on, in this range. And in terms of the way markets usually work, and I sort of use that term with a little bit of trepidation here, is that usually when you get these long high consolidations, it's quite bullish. This has gone on a little longer than most people have thought, than I've thought. I mean, I think we're nigh on setting a record here, going back something like 45 years in terms of daily narrow range. It's been under 1%, I think, for longer than any other period in the past 45 years. So on a daily chart, this is also ES futures. I'll pull this down a little bit so you can see it better. We popped above. We looked like we were going to have a breakout, and then we came right back. So I like reading candles, but also they can lead you astray at times. This blue candle, for instance, shouldn't have been a reversal candle. There was no tail, there was no oversold condition, but yet we went straight up. So they don't always do what you think they're going to do. But anyway, this you could have a potential top with a candle like this, with a pop above the range, a false breakout, and then a move back into range. But we'd have to see it again break the lower end of the range, and really not just this 53 level, but break this the 46 level, which was the new range, the bottom of the new range, 46, 43, even something like that. All right. Keep in mind how this looks. This is a very narrow range horizontal set of candles for the last 10, 11, 12 candles. Okay, compare this to the daily NASDAQ. NASDAQ has been going up and up and up and up. So we popped to not a new all-time high. I think let me pull this down a little bit. Okay, so the old all-time high was, guess when? The 2000 tech bubble. NASDAQ has never made a new high since then, but we are very, very, very close. I believe it was low 48s. 48.18 or 48.20, that area. So we're really only about 60, 70 points at the most away from that. That could be a target. for NASDAQ. So I'm not sure. Oh yeah, sorry, I scrolled the chart. So that could be a target, but we're getting into thin air. You look at these techs and they've been overbought for so long. It wouldn't take much really for them to just roll over. You're starting to get a lack of buyers up here when you start getting candles like this. I mean, price is shoving up on on the earnings of a very few companies, the Amazons and things like that rocketed up, Google and things like that on recent earnings. But we're really starting to thin out, So technically this is in breakout mode, but the other indexes are not necessarily following the breakout. And certainly, look at this is YM futures, and YM are the futures contract for the Dow Jones Industrials, the 30 Dow Jones 30 stocks. So if you look at ES, which is S&P 500, it's dead flat. NASDAQ is going up and up and up, and this has already made its high. So when the indexes and technicals have said this is topped here and it's rolling over. So whether we get some support here and a bounce remains to be seen. But the fact that the major indices are not in alignment is a bit of a worry for this sort of breakout bullish case. You got to with price action the way it's been. You got to give the bullish case the benefit of the doubt at all times. But when you see things like this, you see little bits of ugliness, popping up on long-term technicals, long-term internals, and divergences between the indices. Then maybe things aren't all that super healthy as they would seem. Anyway, let's go to the site. I will start with the trend page. We'll do a quick wrap up on internals, and then we'll move on. Okay, thanks. We had a neutral range day again today for I don't know how many. I think 12 or 13 in a row. The dollar weighted touched zero a couple of times. Well, it's certainly off open as normal, but then middle of the day, and it looked like we were going to roll over. And certainly our version of the McClellan, the DTP MCC, is a much faster moving intraday version of the McClellan oscillator. That went negative and stayed negative all day. So this is based on moving averages of the advanced decline line, but a much faster one than the longer-term daily McClellan oscillator, the standard McClellan. Despite that, we had a push back up on the dollar weighted, which is the net money flows of our own index of stocks, key market moving stocks. So they were buying to hold up this market. On deteriorating internals. So what that can mean sometimes is that they're holding price up to finish distributing, to handing off the luggage to the next guy, and then the market will drop when they're done that. But or it just could be this high level consolidation is getting ready to break out again. We really don't know. It's been a really, really tough market to read, I think, for most people, because it's narrow range, it's sitting at the highs, it's not breaking out, and it's not breaking down. So we're kind of have to be in a wait and prove it to me mode. Okay, so breadth was negative for most of the day. Small runs positive, but ended slightly negative. Certainly on the volume delineators, which are based on net volume. Certainly the NASDAQ, this is NASDAQ combined, saw quite a bit of selling. And trends were fairly wide ranged from bullish to bearish. Ended, I would say, in the neutral to bearish territory. All right, let's move on. Volatility. Volatility, which is the VVIX index, was actually up close to 4% on its high today. VXV was 4% on its high today. VIX is up, VXST is up, so this is the 9-day again, this is the 30-day, and this is the 3-month implied volatility indexes. But overall numbers, absolute numbers, still quite near their lows. So VXV above 16 starts to get interesting. It starts to, you probably get a move back to 20 shortly, but it's in the very early stages of a move up in volatility, perhaps. But I've said that before on this rally. and it's turned south again and headed to new lows. So contango, which is the relationship between the front and near month, the next month's expiry VIX futures, got down to almost 20% today. So I think it was 19 and change on its low. So that's a huge bleed, negative roll yield bleed for products like VXX, and especially the leveraged version, which is UVXY, which has been dropping. It's been an unbelievable drop. I think it's something like 30% a week or something like that, and just had a new reverse split. So that's its sixth reverse split for UVXY in its history since inception, I believe in November 2011, if I recall correctly. Okay, so enough with the history lesson. Let's go on to block trades. Okay, so block trades are showing some selling. So there's a line of prints. SPY made its high, in pre-market, and came down, a corrective move back up, and stayed below these prints for the rest of the day. So we have some prints on the near the end of the day or in after hours, but price didn't pop back above here. So really this is going to be your line of resistance. 2717 is a very key number for SPY. So keep, as long as we stay below that, we have a chance of dropping. If we pop above that, don't short your brains out, because it's probably not going to work out very well for you. Okay, QQQ. Again, just like the difference in all the charts, been going up and up and up, and really, I would say, it's got a ton of support, because there's all these levels of block trades down in 115s, 114.55, 113.80, down and down and down, 113.19. It's really going to take some work. If we break these levels, then maybe we have something, but everything else is likely to be corrective. My belief is that when QQQ, which is the ETF for the NASDAQ 100, breaks, it's going to break in decisive fashion, and it's going to waterfall down, probably slice through a number of support levels in one go, because it's been pushed and pushed and pushed. And if you remember, it's exactly what it did last summer, up until Apple earnings came out, and that was the straw that broke the camel's back. It was the last one to make a new high, and then it just tanked. So I'm not saying we're going to have a repeat of August and last summer's action, but some of the things that are occurring are quite similar. Anyway, IWM keeps pushing the highs, 121.09, 121.10, big block trade, a key level now, really up high, but I believe it still has not made a new high on IWM. Lower support 119.21, I would say. This is a new chart for us. I just added the Dow DIA, which is the like SPY, but it's an ETF for the Dow Jones 30. So what we see is every time price pops up, we get sells. We drop down, pops up again, sells. Popped up again today, sells. So, this is a pattern that's bearish on the Dow. But until we get back above, maybe these prints, sorry, I'll just say about 184.58, that's bearish. Okay, moving along, volatility space. Volatility has been so frustrating, because there's been, these big block trades that look like accumulation, and then, price just tanks again. So, we're 75 cents below the last of the big prints. So, are they sells, or are they just slow accumulation for a big move up? We don't really know, but we're so far below them. It's really hard to, we can't really say that VXX is bullish in this case. So we're just gonna, we're really gonna have to see a move above 1078, 1080, and then we can, see some upside. XIV's just been grinding up and up and up, as the market's been in this long consolidation period, and volatility has been dropping every day. We've had high contango, which is actually provides a positive roll yield for XIV, because it's an inverse volatility ETF or exchange traded product. It's actually an ETN, but that benefits from the high contango that actually hurts VXX. So VXX has a bleed every day from negative roll yield. VXX has had a positive little bit of a push on the inflation button from the from the compressors pumping up the balloon because of positive roll yield. Anyway, I'm going to move on. We have some new block trades charts. Basically, I've added a sectors ETF page. It's probably a little incorrectly named. Try to find a name that covers all of these products, and I'll give you a prize. XLF, which is a financial ETF, has been going lower. Again, not necessarily bullish for the market. I started charting EFA, which is a like a world index ETF. It's institutionally traded, largely institutionally traded. Can be seen as maybe perhaps a proxy for global risk on and off. It did make a high. Forget this. This is either a fat finger or a false print. Forget this spike down. But anyway, it's made a huge print at the top, and we're below that, so that's going to have to be 5802 is going to have to be our high water mark. If we get above that, we're bullish. If we stay below that, bearish. So again, global risk on and risk off, and we're below the highs and below a huge print. EEM, emerging markets. Again, big print. Forget some of these spike downs. We have great data, but the problem is that they cover so many exchanges and a few sources. If you get one bad trade from one exchange on one data feed, it'll do this. So, and it's a bugger to go in and go through a couple million entries and find it. Anyway, so that's the story with those spike prints. Metals, seems to be bullish. We have a big print GLD at the high, dropped below and came back up, and a couple more prints. Really, we want to see it stay at or above this sort of 128.95 level. Several levels of support all the way down, 127.19. I would probably say real support is down here, 125.39. GDX, always big prints at the end of the day because of rebalancing of the leverage ETFs, but again, bullish above and bearish below the 30.93 level. SLV, not a lot of huge prints lately. A big one on the recent high, 1935. We're slightly above that now, so I guess we have to say bullish, but it's not a convincing move yet. We'd like to see this move up in earnest. All right, on to energy. Energy is an interesting area because as you know, oil's been crushed in the last number of sessions off the recent high, off the 50 area. Couldn't really break much above that, and we dropped $10. So that's a pretty big move. Not a lot of supportive block trades on oil yet, but we got a big print at the end of the day and a couple of other small prints over 1 million. Right near the low of the day, 941 on USO, which is the biggest oil ETF, and also XLE, 3.6 and change million at 65.27. So I'm going to say that there is probably some buying for a bounce, whether that's a dead cat bounce or something else, we're not sure. I think it likely will be, but a dead cat bounce in oil, which has moved down $10, can be $3, $4, $5 quite easily, which is a big move, over 10% in oil. So that's what I expect. I expect this to be a local bottom on oil, but that'll be wrong. We'll be wrong with that thesis if we drop and stay below these levels, 65.27 and 941. Okay, I want to draw your attention to a new chart that we produced this past week. It is a volume profile chart on SPY. It only takes the biggest block trades that we watch, the biggest category that we watch, which is over 250,000 in a single trade. So each print of 250,000 over a 6-month period, we've added up the volume of it and produced a volume profile chart. So this is really, it's not a volume profile chart of all trades, it's just the biggest institutional trades. So I think it's going to be an interesting way to look at support and resistance on the SPY in a visual way, and that the red bar is obviously the current price. Each bar covers 50 cents on the SPY, and you'll see interesting things like, a gap here. So not a lot of trading in the 213.50 to 214.50 range. So if we should get down there, that's air. It means there's not a lot of support here, and probably not a lot of support until about 210.50. So we're holding up in the upper end of range. There's significant volume at 216 to 216.50, building decent volume in the above that into the 217s. Range, and we mentioned that 217.17 level earlier on the SPY chart, so that's one to watch out. If this starts dropping and we get into some of this low volume area, we'll probably break right through it and head down to the 210s. Okay, all right. So I think that's it. We had quite a long wrap today, and thanks for joining, and we'll see you shortly. Bye bye.